Hey guys, how you doing? So Dan from Trading with Dan here. So today we're just gonna have a quick look at the Federal Reserve's latest scam, their latest piece of market manipulation. This one I believe is actually quite important. So this is the FIMA, which stands for the Foreign International Monetary Authorities repo facility. So what it is, we'll read through the press release because it's not long, and then I'll just explain what they're actually doing. So the Federal Reserve announces the establishment of a temporary, obviously we know what temporary means permanent, FIMA repo facility to help support the smooth functioning of the financial markets. Right. So the Federal Reserve on Tuesday announced the establishment of a temporary, permanent repurchase agreement facility for foreign and international monetary authorities. So that's what the FIMA is, to help support the smooth functioning of financial markets, including the US Treasury market. And by including, they mean just the US Treasury market. And this and thus maintain supply of the US credit to households and businesses. The FIMA repo facility will allow FIMA account holders, which consist of central banks and other monetary authorities whose accounts are at the Federal Reserve Bank of New York, to enter into repurchase agreements with the Federal Reserve. In these transactions, FIMA account holders temporarily exchange their US Treasury securities held with the Federal Reserve for US dollars, which can be made available to institutions in their jurisdiction. The facility should help support the smooth functioning of the US Treasury market by providing an alternative temporary source of US dollars other than the sales of securities in the open market. It should also serve, along with the US dollar liquidity swap lines in the Federal Reserve established with other central banks, to help ease strains in the global US dollar funding markets. The US Federal Reserve provides US dollar denominated banking services to FIMA account holders in support of the Federal Reserve objective, in recognition of the US dollar's predominant role as the international currency. The FIMA repo facility, which adds to the range of services the Federal Reserve provides, will be available beginning April 6 and will continue for at least 6 months. Right, so basically, very simply, what they're doing is other central banks, other banking institutions in other parts of the world require US dollars because they need to buy things in dollars. They have dollar debt. There basically is a lack of dollars. So what these institutions can very easily do, because they hold US treasuries, they can just sell those US treasuries and then get the dollars. Simple as that. I mean, that's what they should do. But what obviously happens if they do that, that will push it will basically push down the value of the treasuries, which because it's inverse to the yield, will increase the yield, i.e. the interest rate that the federal government, the American government has to pay to borrow money, to issue more treasuries, because obviously if the yield's higher, it means they have to pay high funding costs, so the interest rate is up. So basically in a scam, in what is a scam, they're basically saying you can sell all your treasuries to us temporarily at this one set price the market is, without actually selling into the market, because obviously that will drive prices down, because if you're selling treasuries and there's a more amount of treasury gets sold into the market, the price of that thing should go down. I mean, that's how markets work. So if you prevent that, it's just market manipulation. So they're saying this, that they'll just give you the dollars, you don't have to sell it. So for example, it's just ridiculous. It's like, say I basically buy loads of Apple stock, loads of Apple shares, and I'm talking say I buy half of all the Apple shares that there are. So I know buying half of those Apple shares pushes the price up. So in the same way that all the other countries in the world bought the treasuries, that pushed the price up. So that pushed the price up, so it pushed the yield down, so Americans sat there enjoying their low interest rates, people were buying the treasuries, everything's all honky-dory, that's great. So in the analogy, I bought all the Apple shares. Apple share price has gone up loads because I bought all the shares and pushed the price up. The same in the treasury market. Foreign entities, central banks, governments, whatever, have bought treasuries, pushed basically the price of treasuries up, i.e. the yield down, interest rates down, everything's honky-dory. So then I push Apple shares all the way to like a ridiculous high that they shouldn't really be at. And then I decide, right, so I want to sell all these treasuries now. Sorry, Apple shares now. And then it's like, if I sell these Apple shares, I obviously can't just sit on all the profit. I can't just basically realise all the paper profit for buying up half of all the Apple shares in existence and then just sell them all at the high and not expect it to drive the price down, and then my Apple shares actually go down in price. I mean, you guys know that's ridiculous. Do you know what I mean? Otherwise, everybody would do it. Everybody would be like, right, can I just borrow $1 billion? I'm going to buy basically all the shares in this company, and when the price goes up, because I bought all the shares, I want to instantly cash out of all my $1 billion worth of shares at the high without affecting the market and take all my money. And I mean, anybody with any brain knows that is just ridiculous. But the Fed, the Treasury, the Fed, they actually think that isn't ridiculous. So they think, right, okay, so yeah, everybody can buy these. So if you want to sell them, guys, don't sell them in the market. We will just basically print you some dollars out of nowhere, to give to you, so you don't have to actually sell them in a real life market like you should have to, because that would push the price down like it should do. And then we would have to pay higher interest rates. So there you go. There you have it, guys. I hope that makes you understand, like, very clearly, that it's ridiculous. Do you know what I mean? That it's a scam. The federal, it's manipulation of the interest rates lower still, like they have been doing for like obviously years, suppressing yields, keeping interest rates too low for too long, and now the market, basically interest rates should go up because obviously there's too much basically money being printed, too much issuance of treasuries, too many people, too many sellers of treasuries, and the interest rates, then yeah, basically the interest rates should go up, and it's not been allowed to happen, i.e. scam. So anyway, so this is not a financial advice. I'm not a financial advisor. Hopefully that information was useful to you. This also is just one of a plethora of scams that the Federal Reserve is doing. I mean, they announce new ones literally every day now to basically try and not get people to sell anything in any market or in an open market and drive the prices down like they should do, and they'll just basically give you the money out of nowhere. They sort of hide it by saying, oh, it's just temporary, yeah, it's just temporary, it's not, so we're not really selling it. They're going to swap them back for the dollars, but they're not guys. They're not going to swap these back for the dollars. These dollars are disappearing. We're in a global deflationary environment of all asset prices, bond prices, stock prices, commodities, everything, right? The debt bubble is deflating. The Federal Reserve is printing these dollars to basically buy these assets temporarily in repo, and then those dollars that go into the world economy, they disappear, they vanish, they're gone. They are not there. They are not available to buy those treasuries back. It is not temporary, it is a scam. Anyway, right, so yeah, again, one more time, thanks for listening, guys. I've got some more videos coming for you today. Hope I cleared that up for you, and that is just that. I hope that just shows you the sort of games that the Fed is up to. And yeah, I'm not a financial advisor. Always do your own research, and I'll speak to you soon.